Great to hear your voice, buddy.
Great to be here with you, Dale, as always.
So, Aleks, you're a dedicated tweeter in my stream at Forex Stop Hunter, and I really appreciate all the looks and things that you share in my stream. And people ask me, Aleks, they go, Dale, why do I share other people or promo their work when they could be considered a competitor? And I look at it this way, what's the cost of thanking somebody, validating them, and lifting them up? Because, it's not always the guys with 50,000 followers that are the best traders. So I appreciate all the hard work you put out there, and maybe for the community you could tell us, like I asked Blake earlier. I know that you've told me before, but my memory isn't that great. I can remember everyone's trades, but not everyone's stories. How did you get involved in the industry?
Yeah, first of all, I would like to thank you for giving me a chance to share with your community, and also letting me in your timeline, because I knew that you have a lot of followers, and that word will be spread, and I hope that we did some help to the people. Regarding my beginnings, I started as a stockbroker first.
You and Blake.
Yes, through various banks in Europe, but I didn't like that job, so I discovered in 2008 the Forex market, and I switched to something that is more, I will say, dynamic than stock market and investing in stocks. But I still do like trading the stocks, but I do prefer more trading the Forex market as well.
Let me just take a guess why you didn't like being a stockbroker. I was a commodity broker. I also had a Series 7, and it's probably the same reason Blake left it, is because the main duty of a stockbroker, especially when you're starting, is to make cold calls. How did you like that?
Yes, it was hard. It was hard. It was difficult, and you can't give advice to customers, and when you cannot give advice to customers, it is like selling something you are not believing it. So it is hard.
And how about this? Here's a cold call. Hello, Mr. Allen. My name's Dale Pinkert. I'm very successful in the market, but I'm working A's today. Your name is under my A column on my lead list, and I'm calling you because I have so much valuable information. I'm still making cold calls. Pretty difficult to overcome, isn't it?
Yes, really difficult.
All right, so Aleks, what are we looking at here? I'm interested. I notice on Twitter you kind of give a lot of either or scenarios. Like you'll put some arrows in here, and I would guess if you would tweet this, you would say if we broke out over that red descending triangle line that we're going higher, what would tell you and be an early indication that this dollar rally is terminating and that we could start to head down again?
Yeah, it is pretty hard at the moment, because I do not prefer this consolidation as all the traders in the market as well, but I do believe in levels, and especially the strong one, which are making these patterns work over time. So looking at particular this DXY index and USD, which is the most important in the market also for the stocks and commodities and currencies, the level which needs to be overcome is 101.5, and I always say we need to see a clear daily close. What does it mean? The clear daily green candle above this trend line, the falling trend line, and the 101.5 level. It will be an indication that there is a greater probability for the dollar to continue higher. And only in the case of a break below 98.9, we will see a reversal to the downside and a deeper pullback, which means this 200 SMA is the key for the downside, as well as this 100 SMA and the falling trend line is the key for the upside.
Not only that, Aleks, back at your 200, you have a breakdown line, you have an uptrend line, you have a lot of confluence there. So, yeah, and you know, to me, even though it's not completely flat, I was taught that descending triangles were potential reversal formations if they break down. So, you know, that's my bias going into it. I know everything and anything can happen, but a lot of confluence. Now, you made a great point, because I still do this, where I try and get an edge on a candle or a breakout or a failure, so I'm in before the herd, you know, if I have a bias. But it actually is much smarter to wait for a confirmation, and you don't know what kind of candle you have till it closes. How long did it take you to learn that, since I'm into my third decade and still trying to be patient enough to wait for a candle to close?
Yeah, it is always hard. I haven't been able to work on that even now. The patience is not still here, so we all get carried away. But I think I am making progress in this. So I prefer patience over trading and much exposure on the market. And now with these clear levels, it is better to wait, as you said. And also, I agree on that descending triangles could be a reversal scenarios. But in this positioning now, and fundamentally and technically, it is hard to say anything about the movement. So we
only God, Nostradamus, and Janet Yellen know.
Yeah,
right.
I think Janet Yellen doesn't know that. She only speaks about that, but she doesn't know that. Yeah.
Okay. Maybe all it would take would be a comment from Trump. You know, what do you think about the fact, you know, he's the first president that I can remember in my trading career that's having a lot of impact on currency markets when he opens his mouth. Have you ever experienced that before from any political leader outside of central bankers?
No, I'm also confused about that, because I think we are now trading the presidents and politicians and pools and everything. We had 3 of this kind of events last year, and now we have one ahead, which is the French elections in Europe. So that is all confusing for us, but looking technically and with experience, we could do something to avoid the pain of losses from these sudden reversals and algos trading, because I read somewhere that there are now programs that are using Twitter sentiment to trade, and that is an improvement of the algos trading. I will say like that.
Huh. What else? I know this is really the linchpin for everything else that you're looking at is the dollar. Any special situations that you think, you know, everything's trade selection. So if the dollar is going to turn, so here's one of Alex's, this is how he tweets a lot of his work. You could see he has 2 arrows. Why do you still think that there's a chance for an up arrow when we're underneath the blue trend line?
Yes, because in the XY there is a space also for consolidation, and in the Euro USD I think also there is a space in consolidation, and I'm afraid of that, because we could continue for even 1 month or 2 with this consolidation, and we have a nice lineup here in this wedge, which is lasting almost 5 to 6 months in Euro USD, and now we are close to breaking it down. But look at this candle now working today. Important, and this is the crucial level, the key level I'm looking at. That is why these arrows you are mentioning on my charts, and I just want to show the people that they need to be patient with these levels and not to rush into anything, because we could have a reversal here and a ride to 1.066, and there everything is possible.
Everything is. So even though it looks like a breakdown, you're skeptical of trying to short the breakdown. It's right at the breakdown level.
Yeah.
And why though? Why?
I would like to see this kind of a candle here. This red candle. I see.
All right.
This full red candle. This is not a good candle.
Okay.
No matter it is in the key level and the range, and it's in the middle of the range somewhere.
So you think it might be a trap? You're open to the possibility that this is a false breakdown?
Yeah, we had this kind of traps almost for 5 months now, and I'm not a believer in this break at this moment, but who knows, maybe Janet Yellen will change that this evening, and some French pulls maybe.
Yeah. Have you ever heard my Janet Yellen imitation?
Yeah, I heard it today.
Okay. What do you think?
It is fantastic. It is so good.
Okay, David Hooper is saying he can't see a screen. Everyone else see the screen? Screen is frozen? Okay.
Do you see it now?
It's all good.
Well, I see the screen.
We got it now. Okay, you can see it now? Okay. Okay. All right, so euro, dollar, what about risk on, risk off? You have any views on U.S. dollar yen? That's really kind of the linchpin for the bond market and the S&Ps, and looks like you think there's that we may put in a bottom here last week because you only have one arrow. If we get through today's highs, you think we'll
exactly. Yes, exactly. That is the point. Above the 111.67, we could see right to this upper wedge line, which is 114. Also, this is the wedge like in the DXY or Euro USD. Only the difference is that this key level maybe on the USD Japanese yen is closer to be broken, not so far looking at this point of the time, but looking from bottoming process here, 1, 2, 3, we could see maybe a break. I heard on your recent comments from Blake about the S&P, and I agree with him that we could have a risk-off, risk-on situation, and the market is believing in risk-off, but we could all be wrong on that. So USD Japanese yen could fly high if we have S&P breaking higher.
Right, and under 110, it looks like we could go to the 108, 109 level. That would be very significant critical support for the yen. And then you have 103.
Exactly. Yes, this is 200 SMA, 108.622, and this is crucial. But let me show you the weekly. It is interesting positioning, and that is why I'm inclined to the
the old ouch! You just stabbed me with Andrew's pitchfork.
Yeah.
Ow! Oh man! Oh, I don't even have a butt anymore. So, all right, go ahead, buddy.
Yeah, we do have these two channels, Andrew Pitchfork's, and this one is medium term. This one on the upside is long term, and this one medium term is on the downside. But more important is this 200 SMA on the weekly, which is 110.29, and it was not broken, and it seems like that
yeah, almost looks like a bull flag, doesn't it? We had that big rally off the election, and we've been marking it off more, correcting more in time than price, and we also have confirmed highs up there too, don't we?
Yes.
Yeah, okay.
Exactly.
Yeah,
exactly.
So that would argue for possibly even taking out the 118 level again if we got going, wouldn't it?
Yes, and what I see now in the market is something specific. I think that USD is now switching from being maybe a risk-on companion with the S&P 500 to maybe more safe haven, which is its natural, I will say like that, environment. So
okay, so let me try. I'm sorry I interrupt. People say I interrupt my guests too much, but it's important that whoever is listening understands that. So what you're stating is that if the S&Ps head down and there's risk off, that people will go into the dollar.
Yeah.
Okay, they're not going to get out of the dollar. And a weaker dollar right now is risk on, kind of like it used to be in the old days, from even the lows of the financial crisis. We had a dollar drop 30% and everything else went up 30% in nominal terms. So you think if the S&Ps head up, it'll be with a weaker dollar? Or
maybe so, but I think that consolidation.
Yeah, I don't know.
Yeah, I think that consolidation in the S&P 500 could give a dollar a chance. This consolidation here in this broadening wedge will give a dollar a chance to break this 101.5 and goes higher, and then in some case when the S&P, and if the S&P goes below 2,300, the DXY could then turn to retest the broken 101.5, and then after that the correlation will switch, as you said it, when the S&P 500 goes down, the US dollar will go up for a while, I think, and when we did have or do have last leg to the upside of the DXY, I will show you the weekly, and I think we are now in this possibly a bullish wedge, and I'm expecting this.
What's that, 110? 108, 110?
108, 110, yes.
So that'll finally give us euro under parity.
Yes.
97-ish or so.
Yes, exactly. And this could be triggered by some political event, like maybe French elections, maybe some of the Trump interventions on the Middle East, of the U.S. interventions in the Middle East. It will maybe give the trigger of the S&P 500 going down and the US dollar going extremely up.
Okay, so any correction in the S&P will probably be deflationary with a strong dollar and possibly lower everything else except maybe bonds.
Yeah.
It's hard to put the whole jigsaw puzzle together right now, isn't it?
Yes, it's hard. Because of that, we need to watch these levels carefully, and I think we are now in the key levels of or for the medium term or long term direction in the market, as well for stocks, as well for bonds, and as well for the commodities and the dollar.
And your view on Canada and the oil, I'm looking for a pullback in Canada still, maybe to 32, 31. Is this in the oil? Do you correlate Canada with the oil?
Yes, but this correlation now is not so strong.
As it was.
Yes, as it was.
Okay.
This consolidation in the USD and the ride in the oil didn't drag the USD CAD below this trend line and into this maybe support area.
Yeah, you're right. Great point. It hardly took Canada down, and it's been a $6-7 rally in crude.
Yeah. Yes.
Interesting point. Okay.
Which means that it could be a space for the USD CAD to break to the upside from here, or maybe a little spike lower from here.
That's what I'm looking for. And
yes.
Then, yeah. Okay.
And then to go to the upside and to retest this 1.36 level. And
so that would imply a perhaps a correction in crude.
Yes, and
okay.
Yes, I will look at the crude now, and exactly as you said, I'm looking at this retest of this long-term trend line, which was broken to the downside. So 53 is a big level in the crude. We could have some noisy spikes to maybe 53.55, but as expecting the USD CAD to go higher, I expect one more leg lower in the crude to 42-44 zone.
Okay, and a quick look at gold or silver, precious metal view.
Yes.
I'm sure it's all kind of similar with what we've been talking about here.
Yes, it is. And regarding the gold, my view is unchanged. I still see this as a long-term, I will show it on a weekly, as a long-term downtrend. And we are now testing the confluence of the downside support. If it breaks above 1,270, then we could go higher.
But to 1450, 1500. So we're make or break for gold here in your view.
Yes, it's make or break right now. We could see some noisy consolidation ahead, possibly. If the dollar breaks higher, then the gold will certainly.
You think Friday was a stop hunt? You think they picked off a few stops on Friday on the Tomahawk missile event?
Yes.
That was a pretty negative day. So it's really got to get back and take that high out for something real to be happening now, doesn't it?
Yes, it has to take out this 1,275. It is above the 200 SMA. It has to take out this high to continue higher. Unless it does not, this is a short trade and with a good risk reward.
Okay, so if you're bearish gold, this kind of lines up with a question from Luca in the community. What's your preferred currency pair to play dollar strength? Would it be Aussie or Kiwi with your view on commodities if the dollar rallies?
Yes.
Over Euro? Or would it be Euro?
It will be the Aussie dollar, because I think the possible tensions in this geopolitical tensions are riding it down, and the consolidation of the S&P 500 is not doing good. So this could be the play for the gold weakness, and the USD. It has a lot of space here, a lot of space. It was a significant rally, but I drew here double top, and the neckline is exactly here at 0.75, and the break below that will mean that we have almost 300 pip space to be exploited to the downside.
A lot of great looks, Aleks. I want to thank you for coming here to edify the FACE community, and thank you for being one of the best contributors on my Twitter stream, and I hope that pips rain down on you during the month of April and going forward, my trading warrior brother.
Thank you, Dale. Thank you for everything. Thank you for inviting me. I'm delighted to be with your community, and as well, I do like pips raining on every member of your community.
And the best way for people to follow you is at Aleks, A-L-E-K-S, FX. That's your Twitter handle?
Yes, that's correct.
Okay, and you want to mention your business? I know you have a business, and go ahead and mention it.
Yes, we do have a web presentation service for the traders, which is called trendtradingdna.com. You can find a lot of useful stuff there. We are analysts and traders, so we do have a lot of trade alerts and analysis as well. So stop by and find out what is the best for you.
Thank you, everybody. This was Aleks Ivanovic sharing his technical work with us today. Everyone thank Aleks for coming here and giving us his time.
Thank you.
Thank you.
Have a nice day and goodbye.
All right. See you, Aleks.
Thank you.
And
Bye.
This is for the people who said they were experiencing a slight drawdown in their trades. This is all I could say. It ain't nothing but a drawdown, not a margin call. It ain't nothing but a drawdown, not a margin call. But don't be scared if you still believe the call. Don't try to be perfect, that would be a lie. Don't try to be perfect, that would be a lie. But you're better than most, and you can look me in the eye. Watch face fly, it ain't nothing but a drawdown, not a margin call. It ain't nothing but a drawdown, not a margin call. But don't be worried if you still believe the call. You all, FACE community, have a great day. See you tomorrow after Janet Yellen. And remember, don't just count your pips, count your blessings. See you tomorrow. Adios.